Hello, this is Wajahat Nazeer. I'm the founder of PakistaniTutors.com, and today I'm recording a lecture on depreciation. Yep. So come straight to the point that what is depreciation. So first we will define what is depreciation, then we will define that what is cost of an asset, that then what is its scrap value, what are the methods of depreciation, and we will also explain you how these methods will be done, how depreciation will be calculated. Okay, so first of all, let me explain that how cost of an asset will be calculated. Okay, yeah, mainly whenever somebody asks you that how cost of an asset will be calculated, so remember one main point. The main point is all the expenses those are necessary to incur, they will be included in the cost of an asset. So what are the items? Cost typically include, number one, definitely the purchase price, the price on which you are purchasing. Sales tax will be included in the cost of an asset. Freight and handling charges. Number four, insurance while in transit. As long as your asset will be in transit, the insurance levied, the insurance incurred on that asset will be included in the cost of an asset. Number five, assembling and installation will also be included in the cost of an asset. Cost of conducting trials. Trial run cost. Trial run cost means that somebody you have hired who have installed the asset, then you are asking him that kindly check that whether the asset is working properly or not. So he will perform a trial, he will perform a test. That cost will also be included in the cost of an asset. Okay. Yeah. Now, what is depreciation? What is depreciation? So, now we have to think about depreciation. This is the question. Answer of this question is depreciation is an expense. Number one, depreciation is an expense. Why we are saying it is an expense? Because we have five major pillars of accounting. So you have to put anything into that five pillars. Either you will say that is an asset, liability, expense, capital, yeah, or revenue. So what is depreciation? Depreciation will come under the heading of expense. Depreciation is an expense which is charged on the useful life of an asset. And what is the useful life of an asset? That you have to decide at the purchasing of that asset. If you're going to purchase a car, so at the time of purchasing, you have to decide that what is the useful life of that car. Let's say 6 years. You are going to buy a truck and you are saying, let's suppose 10 years. So 6 years for car, 10 years for truck. This is the useful life of an asset, and depreciation is charged as an expense on that asset. So depreciation is an expense which is charged on the useful life of an asset. Clear? Will be reported in income statement, where you will put depreciation expense, where you will show depreciation expense. So depreciation expense will be reported in income statement. Means profit and loss account. Clear? Okay. Now depreciation is done. What is the cost of an asset is done. Now what is the scrap value? So question is, what is scrap value? First of all, make one point clear in your mind, that scrap value, residual value, salvage value, all these three values are same. The meaning of all these three values are same. Either you can say scrap value, either you can say salvage value, or you can say the residual value. So now what is the definition of this? The fixed assets estimated value at the end of its useful life. The fixed asset estimated value at the end of its useful life is called, or is known as, scrap value. Clear? And again, the scrap value and the residual value, or the scrap value, has to be estimated at the time when you are going to place your asset in working condition. So again, you will decide the scrap value at the time when you are going to put that asset into working condition, or whenever you want to place that asset for working, at that time you will decide. For example, we were saying that car, the life of car was 6 years. The estimated useful life of car is 6 years. The cost of car is $100,000 or rupees, or whatever currency you are using in your country. So cost of car is $100,000. 6 years is the useful life. Now at this point you have to SCRAP, scrap value. At this point you have to define the scrap value. That $10,000 is the scrap value of this asset. Clear? So scrap value, residual value, salvage value, and this lecture is equally beneficial for BCom, for intermediate, for MBA, for O-level, for A-level accounting. So whatever is your level, just remember one thing, that accounting will not change from one place to another, or depreciation will not change from one place to another. So this is the very important point to understand. Okay. Now what's the next? What are the methods of depreciation? Now what are the methods of depreciation? There are a lot of methods of depreciation, but we are mainly focusing on three main methods of depreciation. Number one, straight line method. Number two, reducing balance method, or the same method, reducing balance method, is also known as diminishing balance method. So reducing balance method, diminishing balance method, or another name of the method is declining balance. And I will explain that why the first one is called straight line method, why the second one is known as reducing balance method or diminishing balance method or declining balance method, or the third one is known as sum of the year digit method. Now, just for your understanding, the scrap value will be used in this. Scrap value will be used in the formula of straight line method, and scrap value will be used in sum of the year digit method. Now we will explain each method, and we'll try to explain that how each method will calculate depreciation. Clear? Very good. So first one is straight line method. To calculate depreciation under straight line method, you need three main things. You must have a value of cost, you must have a figure or a number for scrap value, and you must have its useful life. And the formula to calculate straight line depreciation will be cost minus scrap value divided by its useful life in years. Okay, so this is the straight line method, that you must have cost. For example, we are talking about car in which we have a cost of rupees $100,000. The scrap value is 10,000. So useful life we are taking 6 years. If you want to calculate depreciation per year, so the cost is $100,000 minus 10,000 divided by how much? 6? Yeah, I don't have calculators, no problem. 90,000 divided by 6. 90,000 divided by 6 will be the depreciation per year, and which will be 15,000. So 15,000 will be your depreciation per year. Depreciation expense per year. Clear? Okay. Next. So this is all about the straight line method. And before moving ahead, I want to no need. We will go to the reducing balance method or declining balance method or diminishing balance method. So now we are going to explain those methods. Sometime the rate of depreciation is not given. Where we are talking about the second method, which is diminishing balance method, or as I told you before, the reducing balance method, diminishing balance method, reducing balance method, or declining balance method. So sometimes the rate of depreciation is not given. It is also known as WDV method. So sometimes the rate of depreciation is not given. We can calculate the rate of depreciation by 1 minus n salvage value, which I have told you before is great value, salvage value divided by cost. So this can be calculated, but most of the time the rate is given. Most of the time the rate of depreciation is given. So you don't need to calculate it, but just for your information, just for your understanding, if you can note it down anywhere, if the rate of depreciation is not given, you can write down 1 minus n under root salvage value over cost. Clear? Now, how depreciation will be calculated? How depreciation will be calculated in this method? Second is reducing slash diminishing. Reducing or diminishing balance method, how depreciation will be calculated in this method. Yeah. So we need two things. Number one, we must have the cost. We must have the cost of asset. Cost is, for example, 100,000. Cost is 100,000, and the rate of depreciation is 20%. So how you will solve, how you will calculate depreciation first year? Depreciation expense of first year. Depreciation expense for the first year will be calculated cost multiplied by rate. So this will become 100,000 is the cost and rate is 20%, will give you 20,000. So this is the depreciation expense of first year. This is the depreciation expense for first year. Now for second year, how depreciation expense of second year will be calculated? What we do? Cost minus accumulated depreciation multiplied by rate. What is accumulated depreciation? This is now very important to explain that what is accumulated depreciation. What is accumulated depreciation? Either we say accumulated depreciation or we say allowance for depreciation, or we say provision for depreciation. So accumulated depreciation, allowance for depreciation, provision for depreciation, all are same thing, but how they are generated. So let me draw a column. For example, let's take example of a straight line. The cost is and why we say straight line depreciation? Because straight, S-T-R-A-I-G-H-T, straight line method. So we have said that the cost of car is $100,000, the depreciation is 15,000. So each year, either in year 1, either in year 2, either in year 3 or in 4, this is the cost will remain same, $100,000. The depreciation expense, because we are talking about the straight line method. In a straight line method, the depreciation expense will remain same throughout life. So this will be 15,000 here, this will be 15,000, this will be 15,000. So now what is allowance? What is allowance for depreciation? What is accumulated depreciation? That this is the addition of all the depreciation expense which is charged so far. So in the first year, the total depreciation expense is charged is 15,000. In second year, it becomes 15 plus this. So this is become 30,000. So that's how it will be done. In the third year, this will be 45,000. At the end of 4 years, this depreciation will become $60,000. Clear? This will become $60,000. And now let me also write book value for you. Book value is depreciation minus allowance. Sorry, depreciation, no, cost minus allowance. So book value is cost minus all the accumulated depreciation. So in the first year, $100,000 minus 15,000 will give you 85. In second year, 100,000 minus 30 will give you 70,000. This will be 55,000. And at the end of fourth year, the book value of your asset will become 40,000. So for the first time, now we are coming back to reducing balance method. How depreciation value will be calculated? Cost we have written 100,000. Rate of depreciation is 20%. Depreciation expense for the first year will be calculated as cost into rate. So this will become 100,000 into 20% will become 20,000. Second year we can say that it will be charged on cost minus accumulated depreciation, which is equivalent to the book value into rate. So $100,000 minus 20,000 will be 80,000 into 20% rate will be 16,000. So now you can observe one thing, that first year this was the depreciation using reducing balance method was 20,000. In the second year, this will become 16,000. And believe me, once you calculate the third year depreciation, you will find a value less than 16,000. That's why we say that this method is known as reducing balance method, declining balance method, or diminishing balance method. That's how it will be done. Clear? Now we are going on the now we are talking about the third method of depreciation, which is known as sum of the year digit method. And now you must have something, a clue that why we were saying that the first one is some straight line method, because the depreciation expense is same in all the years. The depreciation expense is same in all the years. That's why we are saying that this is a straight line method. You are getting a straight line of depreciation till end. First year it is 15,000, second year it is 15,000, third year it is also 15,000. That's why we are saying even the fourth year, even the fifth year or sixth year, it will remain 15,000. That's that we are saying that this is straight line method. And as I have told you that why we are saying it reducing balance method, diminishing balance method, or declining balance method, because each year you will get a lesser value as compared to the previous year. That's why we are saying this is reducing balance method, diminishing balance method, declining balance method. So now the third one is sum of the year digit method. So why we are saying this as sum of the year digit method? Now again, let's take example. For example, the cost of car is 100,000. This time we are taking the life as 5 years, and scrap value, definitely scrap value will be 10,000. Okay, 10,000 is the scrap value. Now how this method will calculate depreciation? Okay, first of all we must have to find sum of the years. If it is 5 years, what does it mean? You can find out. Let me change the color. Now I am answer. Sum of the years. How sum of the 5 years will be calculated? 5 years means 1 plus 2 plus 3 plus 4 plus 5. 5 plus 4 is 9. 9 plus 3 is 12. 12 plus 2 is 14. 14 and 1 will be 15 years. So this 15 will be used to calculate depreciation. That's why we are saying it sum of the year digit method. This is 5, we have easily calculated, but if this 5 will become 25, a larger value, so definitely sum of the years will be calculated by a formula. Sum of the years will be calculated as n into n plus 1 divided by 2. Now let me calculate it for you. 5 into 5 plus 1 divided by 2. So 5 multiplied by 5 plus 1 will be 6 divided by 2. This will become 30 divided by 2 will be 50. So you can find out the sum of the years in this method first. So that's why we call it sum of the year digit method, that whatever will be the life, you have to find out the sum of the years of that life. In 5 we have calculated 15 years, 10 will be a different one, 25 years life will give you a different sum of the years. Okay, now we will explain you that how depreciation will be calculated in sum of the year digit method. Okay. Again I am making a chart. This is cost, depreciable cost. Depreciable cost. So this is 1, 2, 3, 4 and 5. So we have the years. Here I am writing the years. 1, 2, 3, 4 and 5. So cost is 100,000 will remain same. 100,000. Sum of the years digit method. Sum of the year digit method. 100, 1000, 100, 1000, 100, 1000. So depreciable cost is cost minus scrap value. Look at this. What is your car value is 100,000, scrap value is 10,000. So first, in the first figure, I will explain 100,000 minus 10,000. So this will become 90,000. So this will become 90,000. This will become 90,000. This will become 90,000. So cost minus scrap value. What is depreciable cost? What is depreciable cost? Is equals to cost minus scrap value. Now how depreciation expense will be calculated. Now how depreciation expense will be calculated. For the first time it will be 90,000 multiply by 5 over 15. And whatever will be the answer, that will be the depreciation expense. I don't have calculator, that's why I'm not writing it. First year, this will be 90,000 multiplied by 5 over 15. Second year, 90,000 multiplied by 4 over 15. Third year, this will be 90,000 multiplied by 3 over 15. Now I hope you can answer the fourth year depreciation by writing 2 over 15, and 90,000 multiplied by 1 over 15 will be the depreciation for fifth year. So whatever will be the answer, that's how sum of the year digit method depreciation will be calculated. And I'm glad that we have covered three topics: straight line method, reducing balance method, and sum of the year digit method. I hope you have enjoyed my video, but still, if you think that this video has some loopholes, this video has something missing, you can upload the same video. You can upload your own video instead of disliking my video. Okay, thanks for watching. Take care. You can contact me on the number given above, which is +92 300 256 2296. We charge $9 per hour. We teach Pakistani, Indians, and Arab students. This lecture is equally beneficial for OA level, IGCSE, Edexcel, BCom, MBA level students. And I teach accounting, statistics, and definitely help in the same assignments. Thanks for watching my video. Take care. Bye.